Let's focus on another company, Prime Focus. Vikas Rathee, the group COO of the company, now joins us. Hi Vikas, this was a good quarter for you all. Your revenues went up 18%. You all managed to improve your margins as well. But on the whole, in the last 9 months, the revenue growth for the company has only been about 5 to 6%. What are you hoping to close FY14 with in terms of revenues, and your expectation how FY15 is likely to be in terms of the top line growth?
Yeah, thank you very much. It has been a good quarter. I think we continue to kind of drive momentum in the business on our side in relation to what our strategy is, in relation to growing our new age businesses, which is the VFX 3D part of the business on the creative services side, and then the technology-centric services business, which is under Prime Focus Technologies. Both those businesses demonstrated great growth both on the revenue side as well as on the EBITDA side. You talk about consolidated revenues being only up about 6%. It's partly because we continue to manage our legacy business for profitability and ensuring that we keep the profitable business growing, and the ones where we see commoditization and the sort to try and de-emphasize the same. So even with about 6% revenue growth, I think the EBITDA growth is almost 30+%. So I think that's fundamentally the focus, not just growing revenues, but growing revenues profitably and driving more efficiencies in each of our business segments.
Fair enough, Vikas. But just focusing on this quarter, you've generated sales of 214 crores. Can you just take us through what was new business generated this quarter? For example, which projects you worked on and hence you got revenues, and how much did you generate from legacy, and what does your legacy revenue even comprise of?
Yeah, that's a good question. We have about 214 odd crores. I mean, this quarter we actually had about 84% of our entire consolidated revenues coming from our new businesses. It's up from about 60 odd percent about a year or so ago. So that's when I say when you continue to grow the new age businesses. I mean, to give you a sense, our UD and VFX business, which is 3D and VFX, generated about in this quarter about 136 odd crores. We had 44 crores from our technologies business, again growing about 100+%. And then on the legacy business, we were down about up almost half. So, and that also includes some eliminations that we have on intercompany perspective. When I say legacy, I think it's a typical the equipment rental, is it some of the post-production work that we do both in India and abroad. And that business, pieces of it continue to get commoditized, and I think we've been a dominant player in the India market especially. And I think we want to do large projects, profitable projects, and not really compromise on pricing there. So I think that's where the discipline is coming in. It generates cash for us, and I think that's what the focus is, and driving our customers toward more package services where we can provide our technology platform, the VFX 3D business, that part of the work, along with traditional the equipment rental, DI, and the other post-production work.
Finance cost for the company, Vikas, is still quite high. This quarter you all paid about 16.3 crores. Could you tell us what the debt on the books is and any plans with respect to reducing that?
No, absolutely. I think you'll see that our debt, on a gross basis in the company is at about 120 million, which is kind of, flat, and it's the same kind of level which we had about 12 months ago. And in that period, the company has grown significantly, both in the revenue side. We've obviously generated more profitability, but we also grown our employee base, by about 25% in that period. So despite us growing, and again, asset base has grown significantly. Our businesses require high-end equipment. We set up our one-of-a-kind technology services cloud platform, in Mumbai, which is one of its kind in the world, with a significant investment, and through which we are providing, services to companies like Star and Z and Disney, and the whole platform that's being offered. So significant growth on the asset base, and we really haven't grown our debt. I mean, there's some fluctuation you'll see in the finance costs as we some of the lower cost stuff goes away and new lower cost comes in. So I think it's more of a quarterly variation. I think on a yearly perspective, I think we continue to be on a fairly stable situation on the interest cost side.
Okay, Vikas, we'll have to leave it at that. Thanks very much for joining in. The stock itself is up around 2%. Prime Focus managed to keep the debt at the FY13 level. For this quarter, margins jumped up quite significantly to 21%.